Well, let's have a look at what the latest market movements are. I'm joined by Michael Hewson, an independent market analyst and Good Money Guide contributor. Thanks for being with us today, Michael. Talk us through the numbers today, because it does look like investors aren't seeing any more reason to be bullish about the UK and its prospects right now.
Oh, indeed, Tig, that they aren't. I mean, obviously, the 10-year yield now is at just below 4.9%. There is a crisis of confidence, I think, in the UK as an investment destination. It's not really been helped by the recent budget from the UK government, which has clobbered businesses. And while it has been a global phenomenon with respect to concerns about sticky inflation, and obviously the US economy is in focus today because of the payrolls report, I think there is a concern that we could see further declines in gilt prices and further rises in gilt yields, and that has real world consequences, in particular for UK mortgage holders.
Sure. Let's just talk about the international dimension, as you say there. Some of the government's defence has been that this is not just a UK issue. There has been a global surge in yields led by concerns about US government borrowing under incoming President Trump. So not just a UK phenomenon.
No, it's not. And obviously, a decent payrolls report today out of the US could exacerbate that move higher in yields. Only last night, one of the Federal Reserve governors, Michelle Bowman, said that she felt that the Fed had limited room for further rate cuts. Well, if that's the case, then it's going to constrain quite starkly the ability of the Bank of England to cut rates further over the course of the next few months. And consequently, given the fact that the UK economy isn't growing, or hasn't grown for the last 2 or 3 months, I think there'll be an awful lot of focus next week on the CPI numbers that are due out, as well as the monthly GDP and retail sales numbers for December.
And Michael, some people saying Rachel Reeves should have cancelled her trip to China, although I think the government's perspective would be that might have spooked investors further. Their position yesterday was that this is not an emergency, no need for intervention, and what difference would staying have made?
Well, I think that's a fair assessment, but I think what she could have done was actually appeared herself in the House of Commons yesterday to answer the urgent question with respect to the bond markets and not send her deputy, Darren Jones. She's giving the impression of being missing in action. And that's never really a good look for a UK Chancellor of the Exchequer when her competence is in question.
Okay, Michael Hewson, thank you very much.